Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for Wednesday, October 14th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for. And I will leave a link to their site in the description box below this video. My name is Rodney Constable. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals is like having Risk Radar for the U.S. stock market. Today, the S&P 500 was down 66 basis points, and we closed at 3488.67. The first chart that we're going to look at is a one-day, one-minute chart. So this is just today's trading action. As you can see here, now this dotted blue line is where we closed yesterday. So anything above that is positive. Of course, anything below that is negative. And as you can see, we opened up the day on a positive note, and then around 10:30 went negative for a few minutes, got positive again, and then shortly before 11:30, the market went negative and sold off from there. We hit the lows of the day just before 12:30 at 3480.55, and then kind of tested that 3482 level several times, as you can see here, and that's why I put this blue line right here. So we kind of came down and kissed this 3482 level several times, as we can see here, and had a little bit of a rally until about 3:30, and then sold off into the close, closing just below 3490 at 3488.67. The next chart that we're going to look at is a 2-month, one-day candlestick chart. So each candlestick represents 1 day of trading. You may remember this chart from last night. I wanted to bring it back in so we could take a look at this trend line. And I talked about the fact last night that if we close beneath 3,500, it would indicate that the market is continuing to weaken, and that is exactly what we saw today. Now, it's not catastrophic, and even though we're down 2 days in a row here, guys, we still need to keep this in perspective, okay? This close today above 3480 was only the 8th day ever in the S&P 500 that we've closed above 3480, which is why I put this line in here, and also because right around this area is where we found today's lows. So I put that 3480 line right there, and as we can see here, 1, 2, 3, 4, 5, 6, 7, 8. We've had 8 days in the history of the S&P 500 where we've closed above 3480. So I think we need to keep this in perspective. And also, we are still above this trend line on the daily candles. So the trend is still intact. Yes, it would be better if we had closed above 3,500, but for now, the trend is still intact. And this trend has been intact since the lows of 3210 that we put in on September 24th. Next, we're going to be looking at a 1 month, 1 hour candlestick chart. So each candlestick represents 1 hour of trading. And I wanted to show you the trend lines on an hourly basis. And I've drawn the trend line in a couple of different ways here. The traditional way of drawing trend lines is to connect the bottoms of the candle body of the lowest candles in the uptrend, and that's what you can see here. Okay, so basically it's these two candles. There's one back here on September 25th and the one here from October 6th. All right, but when we draw a little tighter trend line and connect the bodies of the rest of the candles and eliminate these two, use those as aberrations, what we can see is that this afternoon's sell-off brought us right down to this trend line, and we closed just beneath it. So again, even on the hourly candles, you can see here that regardless of whether you want to draw a real tight trend line and use these two candles as an aberration or draw a more traditional trend line, the trend is still intact. Okay. Now, with that said, yes, there's been some weakness. And before I forget, if you are a Simple Market Signal subscriber, I did send you an email this afternoon regarding some changes that I'm starting to see within the proprietary model. So please go out and check your email if you are a Simple Market Signal subscriber. If you're not a Simple Market Signal subscriber yet, I would encourage you to take a serious look at what we do. Guys, it's less than $20 a month. You get proprietary information. based on the model that I created for my own trading. It took me over 20 years to develop this model, and it really, really helps. So with that said, so far we're not seeing super high volume, even on the sell-off, right? A little bit of volume right here, but compared to these candles, this one here, these back here, today's selling was on relatively low volume. Generally, if the selling is serious, right? If people are really scared and everybody's running for the exits at the same time, you would see volume spikes like these here, even on the hourly candles. And we really just didn't see that this afternoon or even over the last couple of days. It's been on pretty normal volume. So that's why I'm not as concerned yet about the selling that we're seeing over the last couple of days. It seems to be kind of news-driven, profit-taking, and again, we're trading right at the all-time highs in the stock market. The highest close ever on the S&P 500 was back on September 2nd at 35.8084. And then on Monday the 12th, we put in the second highest close ever on the S&P 500. And even with the selling over the last couple of days, today's close was one of the top 8 closes ever in the S&P 500. So again, we just need to keep this in mind that yes, we're starting to see some selling, but whether you're looking on the daily or on the hourly charts, so far the uptrend is still intact. The next chart that we're going to look at is a 1-year daily candlestick chart of the S&P 500, and I've annotated a couple of the support levels below where we're trading, so if the market does continue to sell off, you'll know what to expect and what levels we might drop to. And then this green line here is the 200-day moving average on the S&P 500. So let's talk about that first. As of this afternoon, we are still trading about 12% above the 200-day moving average on the S&P 500. So that is a long way above that long-term average, and it's actually a little higher, not much, but a little higher than what we were back in February before the sell-off. So as you can see here, we were trading, it's about 11.5% right here. We're about 12% now. So, just another data point to keep in mind. When you're that far away from the long-term moving average on anything, but especially a large basket of stocks like the S&P 500, it doesn't mean you have to pull back anytime soon to the long-term moving average, but it does make you vulnerable, okay? So we're trading a long way above the 200-day moving average, and again, we're near all-time highs on the S&P 500, even though in 2020, the earnings on the S&P 500 are likely to be somewhere between 20 and 25% lower than what they were in 2019. So we're getting here on expanding multiples, okay? So if the market does continue to sell off, and it definitely could, guys, it definitely could, all right? So we start to break, these trend lines, both on the hourly and then the daily charts, and we start to sell off. The first level of support, and there's not a lot here, but it would be at 34.20. That's where this blue line is here. You can see that there is some trading through September and right up around here in October. The first time we ever got above the 34.20 area was back in August. So it's really only been the last couple of months that we've traded above 34.20. But that would be the near-term line in the sand, so to speak. So if we continue to sell off over the next few days, 34.20 would be an area to watch. The next level of support, and there is definitely more support here, would be found at 33.30. And you can see here that for August, September, and part of October, we traded right down to and bounced off of the 33.30 area. If 33.30 does not hold, then the next area would be found around 32.10. All right, so 3,200 to 32.10, and you can see going clear back into late 2019 and early 2020. We were bouncing off of this 3,200 to 3,210 area. And so if we continue to sell off, again, 34.20, 33.30, 32.10 are the areas to watch. Now, if the 32.10 level doesn't hold, then the next area of support will be found likely at the 200-day moving average, which, as we can see here, is trading a little over 3,100 on the S&P 500. To be exact, it's 3121.19 is where the 200-day moving average stopped today, 3121.19. So those are the areas, the levels to watch if the market continues to sell off here in the near term. But it's too early to say one way or the other. we'll just have to watch over the next few days. But the next few days will be quite critical, okay, in the market. So we're definitely long in the tooth in a lot of respects. However, any positive news on stimulus or anything like that could allow these markets to continue to creep higher in the short term. But also remember that when we're trading this far above the long-term moving average, it does make us vulnerable to a pullback towards or right down to that 200-day moving average at any time. Before we go any further, let me ask you a question. Do you have a stock market risk management system? Something that helps you understand the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the short-term trend on an ongoing basis? Do you know the direction of the overall trend in the stock market? My system is called Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecasts, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including in numerous bull and bear markets. And what I found is that certain conditions exist during these various market phases. And then based on that information, I created simple, easy to understand signals around these different phases of the market. And the thing is that most people don't know about or have access to the data necessary to do the research that I had to do to put together this model. Now let's take a look at the signals. The red signal has the highest equity risk associated with it, and the worst sell-offs, including bear markets, will happen when the signal is red. When the signal is yellow, this means that equity risk is moderate, and sideways to slightly up or down price action is very common during a yellow signal environment. The green signal is the best signal. It has the lowest equity risk associated with it, and most all upward progress in the stock market will be made in a green signal environment. Said another way, it is very hard to make money in equities unless the signal is green. Okay, a quick refresher on the Simple Market Signals weekly signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red, and what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Now let's take a look at the first 3 months of 2020 so you can see how Simple Market Signals could have helped you in the most recent downturn. We know that we came into the year with a strong stock market, so we had a green signal for the majority of January, but on January 27th, the signal went yellow for a couple of weeks. We went back to green in the first part of February, and I warned my newsletter subscribers on Saturday, the 22nd of February, that I felt like the market was starting to roll over, and that things were changing. And so I gave people a heads up right here over the weekend, and I told them that if the market continued to sell off, that we would probably see at least a yellow signal, if not worse, the following week. And that's exactly what happened. On the 24th, the Simple Market Signals risk signal went yellow. Now, one of the other things that I want to point out here is, in addition to the risk signal, I also have several trend direction indicators in this Simple Market Signals model. Now, the longer term one is called the general trend indicator, and the general trend indicator went negative on the 25th. So on the 24th, the signal went yellow. The general trend indicator went negative on the 25th, and then 2 days later, the signal went red. The risk signal went red. So think about this. All in 1 week, just a few days apart, we had a yellow signal, we had the general trend indicator went negative, and then we had the risk signal went red on the 27th. That was Thursday, all right? And by the way, this general trend indicator is a positive negative signal, and it operates totally independently of the risk signals. It's just trend. So the general trend indicator gives you still another way to monitor and control risk in your portfolio. And guys, that general trend indicator had been positive since October and then went negative. So right there, just those two signals alone told us that something was changing in the stock market. And then by the 27th, the signal had went red, and we can see here that the market fell from there. As part of the Simple Market Signals model, there are three powerful indicators. There's the Simple Market Signals proprietary risk level signal. There's the short-term trend indicator, which helps clarify short-term moves in the overall U.S. stock market. And a normal signal length for the short-term trend indicator is anywhere from 1 or 2 days to 7+ weeks. Then there's the general trend indicator, which is designed to stay positive during the bulk of most uptrends and negative during the bulk of most downtrends. And a normal signal length for the general trend indicator is anywhere from 2 weeks to 5+ months. We disseminate the information through the Simple Market Signals weekly newsletter. In the weekly newsletter, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the short-term trend indicator signal. You will also receive the general trend indicator signal. You will also receive market and sector performance information over multiple time frames. You will receive a recap of what happened in the stock market for the past week. You'll also receive technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information every week in the Simple Market Signals newsletter. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents per day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. And guys, I want to set realistic expectations here, okay? The newsletter isn't fancy. It's effective. It's plain text, no color, no fluff. And please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. Now let's recap what you will get with your Simple Market Signals subscription. You will get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there's a major signal or direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to get that information to you as soon as possible via a special midweek update email. The best fit for a Simple Market Signals subscriber is an investor or trader with at least a 6 to 8 week plus time frame that they're focusing on. If you're a day trader or a really short-term trader, Simple Market Signals may help you a little bit, but the reality is Simple Market Signals is designed for those investors and traders with at least a 6 to 8 week plus time frame that they're focusing on. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video. And to subscribe to Simple Market Signals, you just need to go to the website that you see on the screen here. That's https://simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service, and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an email newsletter, so we will have to have your best email address on file, and make sure this box is checked, because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system, and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. Now, when you subscribe, okay, understand that everything is tied to your email on file. All right, so once you subscribe, you go out to the website simplemarketsignals.com, and it'll take you maybe 5 minutes to subscribe. It's pretty easy, and you just follow the prompts, and then your email on file is then going to drive everything going forward. This is an emailed newsletter subscription. That's how we disseminate the information, and you should get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter that is automatically generated once you subscribe. So if you don't get that welcome letter beyond your confirmation, okay, of the subscription, if you don't get that welcome letter, if you don't see it in your in basket, then go check your spam, your junk, or your promotion folders, especially in Gmail. Having a lot of people that are having the newsletters and everything coming from Simple Market Signals going into the promotion folder. So please make sure that you check your spam, your junk, and your promotion folders. And also understand that the newsletters go out on the weekend. All right. So the goal is to get it out Saturdays by 2 p.m., but it could be any time over the weekend, depending on how long it's taken me to do the research necessary for that week's newsletter. But I try to get it out by 2 p.m. Eastern Standard Time every Saturday if I can. Again, earlier if I can make that happen. And then the next edition, right, once you subscribe, understand that the next edition, right, so if you just subscribe on a Monday, Tuesday, Wednesday, whatever, the next regular edition is going to be set out on Saturday. All right, and then once you subscribe, we will send you, as soon as we can, the latest edition, but we have to send that out manually. So just be patient with us. But again, within a day or two of your subscription, if you don't get this latest edition, then go back and check your spam, junk, and promotion folders, because it's probably hidden in there. All right, so you should get the automatic welcome letter, and then the latest edition within the next day or two of your subscription, and then again the standard newsletter goes out every weekend, but we try to make it no later than 2 p.m. Eastern Standard Time on any Saturday.